In this part, we will look at how a contract may be created. Under the Housing Developers Regulation, we find that a contract for sale and purchase of land or property must be in writing. And we have Schedule G, Schedule H to look at landed properties as well as strata title properties. So we now move into the pre-contract stage. This is what we call the existence of contract. How is a contract created? What are the various methods that we have in creation of a contract? One of the things we need to look at will be, in Malaysian law, we have the Contracts Act 1950. And under Section 10 of the Contracts Act 1950, we have what we call an oral contract. All agreements are contracts. So although we have an oral contract, we find that we are bound by the sale and purchase agreement, which is supposed to be in written form. But just assuming that there is an oral contract, we still have between two individuals. If you're not buying from a housing developer, that's fine. Between two individuals, let's say you have entered into an oral contract. Have you entered into a real oral contract? Because when we talk about oral contract, we then look at the Evidence Act, which has the parole evidence rule. All right, we will look at that in a short while. Another form by which a contract may be created is a collateral contract, another contract that runs side by side. Third, we have contract that is created by correspondence. We also have contracts that may be created pursuant to an option clause. Sometimes you may have in your tenancy agreement, for example, to say that this property may be sold if the tenant so wishes according to the following conditions. That's an option, and that is once the tenant executes that option clause, then the landlord becomes the vendor and the tenant becomes the buyer. Subsequently, you have conditional contracts. Conditional contracts too may be created subject to specific conditions and subject to contract. So we have a complete lecture on conditional and subject to contracts. So I will not go into detail in this point here. An oral contract. A contract for sale and purchase of property is normally a written contract, but as I said, we have oral contracts here in Malaysia. So it is a general contract. So when we have a general contract in existence, then we are bound by the contract rules. The elements prerequisite to a contract are offer and acceptance, consideration, and intention to create legal relations. More details can be found in the case of Abdul Malik and Ansar binti Hamid, 1985, 2 MLJ, page 459. So as I said earlier, we have the parole evidence rule that governs oral contracts. Now, what is this parole evidence rule? In Malaysia, the oral contract for sale and purchase of property is binding on the parties because we do recognize oral contracts or verbal contracts under Section 10 of the Contracts Act 1950. However, whether an oral or a written contract, subsequently a written contract may come into existence and someone may be trying to rely on something oral that was said. So any changes by the parties to the contract are bound by the provisions of the Evidence Act 1950 under Sections 91 and 92 of the said Act. An oral agreement under the parole evidence rule cannot be brought to set aside a written contract or any of the terms in the written contract unless allowed to do so by the proviso to Section 92 of the Evidence Act 1950. Any oral evidence can only be accepted if it does not conflict with, or is different from, or is in addition to, or deviates from the terms of the written agreement. Two important cases actually look at the implications of the parole evidence rule in oral contracts, and where parties try to use oral terms to try and vary the written contract. So please do look at these two cases and study them to see the implications. We also have a few more cases that will throw light on what we have discussed so far. These are the cases of Tan Siew Gek and Lok Po Siong, Eng Mi Yong and Lechumanan, Tan Chong and Sons Motor Company and Alan McKnight, and the case of Tindok Basar and Tinjar. Please consider these cases. The second way it can be done is by way of correspondence. Although we have collateral contracts, but collateral contracts are far and few in between. So we're moving on to correspondence. A contract may be formed by correspondence. In the case of Stellar Private Limited and the North Queensland Fuel Private Limited, the Queensland Supreme Court said that a chain of emails in the context at hand actually served to form a binding contract for the sale of a road house. How was this possible? It is a decision which has important commercial ramifications, particularly in the negotiation of a term sheet or heads of agreement, as the court made this finding even though the parties' communications stated that they were subject to a signed contract. Now you would see this appearing in the subject to contract lectures. Particular terms of the contract had not been agreed upon, and the North Queensland Fuel Private Limited, NQF, argued that there was no sufficient written memorandum of the contract. Now all this shows that the parties were still in a flux scenario. They had still not come to a firm decision. The court applied the principles from the well-known High Court decision of Masters and Cameron, which provides in summary that where parties reach an agreement which is subject to a formal contract, the agreement may be characterized as one of the following. Number one, where the parties have reached finality as to all the terms and intend to be immediately bound, but then propose to have the terms restated in a form, a formal form, which will be fuller or more precise. More words will be thrown in here and there, but not different in effect. Secondly, where the parties have completely agreed upon all the terms and intend no departure from or addition to that which their agreed terms express or imply, but have made performance of one or more of the terms conditional upon the execution of a formal contract or document. And third, where the intention of the parties is not to make a concluded bargain at all unless and until they execute a formal contract. So here you can actually see three scenarios. One is where they are talking about the fact that, oh, they are not really certain as yet. That's the first scenario. The second scenario is, well, we are certain, but we'll still want to have a formal contract with more legalistic terms thrown in, more words thrown in to make it a bit more, presentable, a bit more legal, a document. Or thirdly, we don't intend to have a contract at all until we execute a formal contract. The key takeaways from this particular case is this case serves as a reminder to anyone involved in the negotiation of contracts that email correspondence can lead to a binding agreement, even if the email refers to the negotiations as subject to contract or uses similar wording. Parties need to ensure that they clearly communicate their intention with respect to any proposed contract, including if it is their intention that no concluded bargain is to be reached unless and until a formal contract has been executed. Inconsistent language and actions by parties can actually lead the court to find that a binding contract has come into existence, and this may be not too beneficial for one of the parties. So it is important for the parties to be clear in what they want, whether they are ready to enter into a formal contract or whether they want to have more advice from the legal officers in order to make sure that the document that they are thinking of is actually correct and they are happy with the document. Additionally, since we have seen that a binding contract can be entered into or can be executed, can become into existence by the exchange of emails, now it's very important that if we are in the process of exchanging emails, to be clear as to what we want. Critical terms have to be identified. Because if we look at the case of Manx and Whitley, it is well stated. The three documents, the sale and purchase agreement, agreement with the first appellant, and the loan agreement with the second appellant, must be all read together as if they form part of the same transaction. When the three documents are read as a whole, their effect is this. First, upon the purchase of the property by the respondent, the first appellant shall keep the respondent indemnified in respect of any monetary payments due to the second appellant until the certificate of fitness of occupation is issued. Secondly, the second appellant will lend money to the respondent to pay for the purchase upon the mutual covenants contained in its letter of offer, subject to the conditions that the interest will be paid by the first appellant during the relevant period. Further cases that will emphasize this point and make it more easy to understand are these two cases, MBF Property Services Sindhu and Berhad and the case of SB Anamali. And finally, a contract may come into existence via an option clause. There are two theories about the word option. It can be an offer to sell the land to a purchaser together with an agreement that the offer will not be revoked, or B, it can be a conditional agreement, which is a contract. Now, the characteristics of a valid option. An option must be backed with consideration because it may create a binding contract. An option gives a right to the grantee of the option to enter a private caveat once he had exercised the option. An option must contain specific terms. Stipulated conditions that have been put into the option clause by the grantor of the option must be observed by the grantee of the option. A valid option cannot be revoked by the grantor until the time for the execution of the option by the grantee has lapsed. Then the option is no longer in effect. So we have a lot of cases here for you to look at. So an option must have certain terms. If not, it becomes an invalid option. This is stated by the case of Wisma Dabi. An option that is given will remain an option until it is satisfied, and if an option is not satisfied, then it is no longer a contract, as said by Gopexwan's case. An option without consideration is an invalid option. Remember, it is the forerunner to a contract. Therefore, all the elements must be there. An option without consideration may be recognized as an offer. All is not lost. Once the grantee of the option has exercised the option according to the terms of the agreement that are stipulated, then a contract may be created. All right, but do have a look at the case in Zainul Abidin as to what happened. An option properly exercised may give the grantee a caveatable right. Do refer to the following two cases, Singlian Express and the case of Ko Asun and Dunia Niaga. That brings us to the end of lecture 1, and two more topics that are included in this lecture appear as a separate slide, a separate YouTube presentation, which those will be subject to contract and conditional contract. Please go through these topics and good luck. Thank you.